to this. Now, everybody that you know, especially the realtors, especially the mortgage lenders, if you talk to them, they have this huge clientele that they are serving in this industry. Now, the way to explain to this is, first of all, the commission structure is out there. So what is the commission on this is it is 115% is the base points. So what does that mean? If you're at a 45%, then 45% of 115%, so whatever that comes to, 52%, let's say hypothetical. So you get 52% commission as an associate level. If you're a marketing director, you get 60% of 115, which is about close to 70%. And if you're an RMD, you get about 89.6, which is 90% commission on it. So it is a higher commission product that you can go and represent and give it to your client. That's one. The second thing what I want you to understand is the way this product is sold is pretty simple. First of all, Americo is 100-plus-year-old company. This is not a new company. This product is not new. This product has been in place for years and years and years, probably about the last 3 decades. So it is very popular. They are collecting over $1 billion in premium every year from this product. So it is a big hit, especially in the mortgage world. It is a simplified issue. You don't have to go to the full underwriting. But the way you can approach this, and I personally want to own this product, and I think everybody needs to own one if there is a need. I'll tell you why. See, not all the money that you are going to spend that is going to sit in your checking account. Okay, there is no way that everybody says that, oh, I have $200-300 a month. No, we all save that much money somewhere. But here's the deal is, now, if you spend money, you cannot buy less than 15-year term. The minimum is 15, maximum is 30. The reason you see a higher premium for a 15-year is because the company is paying you back everything if you outlive your term. You can use it for mortgage, you can use it for personal use. But here's the thing is the company has to invest in a place that not only they have to make money, but they also have to return us our investment after 15 years. And they have to protect the cost of insurance and everything at the same point. If something happens to the client, the company has to pay $450,000 or up to $450,000, depending on the client. Now, the way this product is designed and to sell is, first of all, it's an amazing recruiting tool, if you ask me, all the realtors, all the mortgage lenders, and even the people who knows, because if you know how to present this product correctly, okay, I'll tell you, everybody has a neighborhood of 100, 200, 500 homes. If you can just reach out to the people and say, I have this product that can protect your life against the mortgage, if something happens to you, the mortgage is paid off. So the way I would present this product quickly in about 3 to 5 minutes here is, let's say if I know someone, his name is Sam, and Sam owns a $400,000 worth of home. I say, Sam, when you're paying about with property tax, homeowners insurance, in some cases PMI, in some cases they don't have PMI, and the mortgage is roughly about $2,200 to $2,500. Now, when you're paying $2,500, Sam, and you're 38 years old, I don't think so as $6 a day to protect your house in case from the uncertainties of life. Okay, so what's going to happen in this case, Sam, is between 1 and 30-year term, let's say if something happens to the client in the 4th year, where the payoff balance is $390,000 after the $400,000. And if something happens and if the person dies, guess what? $390,000 goes to the lender if they have assigned as a collateral assignee to the lender. Now, let's say, for example, the lender is Wells Fargo. In that case, $390,000 goes to Wells Fargo. The remaining $10,000 comes to the beneficiary, 100% tax-free. Now, if something happens to the client at the age of 20, the term of 29th year, where the payoff balance is $10,000 out of 400 because they paid out $390,000, and if the person dies, $10,000 goes to bank, and the remaining $390,000 comes to the beneficiary, 100% tax-free. So it doesn't matter when the death incident happens, whenever that happens, the money goes to the bank, the remaining balance comes to the beneficiary, 100% tax-free. What if someone becomes disabled in between and they have either a chronic illness, critical illness, or terminal illness? And in all those 3 things, they will pay them in advance based on your severity and life expectancy. They'll say if you have 400, you have a major heart attack, you have stroke, you have major organ transplant, or you cannot perform 2 of the 6 daily living activities. Now, there are so many health conditions that applies in critical that they are eligible for that, or in a chronic, if they cannot perform 2 of the 6 daily living activities, they are eligible for this. And in a terminal illness, it's pretty straightforward. It depends on state to state. In some state, it is 12 months, some state, it is 24 months. If the doctor states that the client has only a life expectancy of 12 to 24 months, generally speaking, about 90% of the death benefit is paid in advance while the person is alive. So he or she can take care of the important aspects of their life with that money. Now, let's say, what if they outlive the term of 15, 20, 25, or 30, whatever they have selected initially? They have to wait for the full term. They cannot say that this is not a cash value product where they say, I cancel and I get the surrender money back. No, there is no money back. You have to wait for the full term in order for this to get the full return of premium. Now, if let's say I bought a $400,000 worth of plan and I outlive, I pay off my mortgage, or it is just personally me. I mean, it doesn't have to be a mortgage back. So here's the thing, what if I outlive 30 years? So as soon as the 30-year term is finished, let's say my annual premium was, for example, $3,000, right? So now in 30 years, what happens is I get my entire $90,000 back to me. And if you ask me, that is a great deal, because most of the term policies is going to be cheaper than, there's no doubt about it, because there is no money back guarantee. No money back guarantee, but they don't get any money back over here. So right now what happens is your premium will be a lot more than the regular term, but the idea is you get your entire money back over here. So that's a big hit. The way I explain to client is, okay, if something happens to you between now and 30 years, or in between the term, and simple, the money goes to the bank, the rest comes to the beneficiary. If you become disabled, chronic, critical, or terminal, don't worry about it. This is a complete cash indemnity product where it is not a reimbursement that you have to submit the receipts and stuff. So you get the full cash indemnity, you can just own it, and just take care of your most important aspects. Now that money, it's not necessary that you only use for mortgage. You can use for anything. Even if you want to go to Vegas, you can go with that money. It's your money. What you want to do with your money is totally up to you. Now, the way I present to them is, in addition to everything what is said, is certain things are not in your control. Like when you're paying $2,500 in mortgage, now in last 10, 15, 20 years, your property tax is not going to remain the same. Every 2 to 3 years, 4 years, the property tax is meant to go up. Now, is that in your control? That is not in your control. Now, you have homeowners insurance. What are the chances of your home catching a fire and you need to drill that? It is less than 0.5%, but we still have a homeowners insurance. What are the chances of your home getting flooded and you need to replace everything? The chances are less than 1%. Well, what are the chances over here that you're paying $200 a month roughly is becoming between 1 and 30 years from now, you have a chronic, critical, or terminal? The chances are pretty high. Okay, out of 10, 7 people will need over the age of 60 some sort of either critical, terminal, or chronic. Now, what are the chances in 1 to 30 that something happens to us, or we may know more? In that case, what happens, you know how it works. And if nothing happens, and I want you to outlive this policy, you get your entire money back after the age of 30. You get one big lump sum check for protecting yourself during it. So, hey, it's a good deal. I mean, it's a no-brainer for you that you can take, and if nothing happens, you get your money back either after 15 years, 20, 25, or 30 years, the term that you select. In my opinion, it sells by itself. There's another company who was at our convention, and they said when they added this product, their yearly volume was about 90 million, and in less than 3 years, that $90 million annual premium, what they were collecting, went up to $800 million. It's literally 10x. So that's the power of this product, and I am very positive this is an amazing recruiting tool. This is amazing for mortgage brokers. This is amazing for lenders and everybody, because you all know. And the training for this is, if you die, family will receive this much money. If you get sick, you get the living benefit. And if you outlive, you get your entire money back. It's as straightforward as that. It's a level premium, okay? It's a 120-year-old company. It's all A plus rated, and they have operations in 48 states. They are not in New York. Okay, other than New York, they have everywhere else that they can do. And it's a very simple process. The approval process takes less than 30 minutes. And they will just send you the policy via email. You just print the policy. If you need the binder, they will send you the binder. It's a quick process. You can assign this policy to the bank if you need it. And at any given point, if you decide, I don't want this policy to assign to bank and I want 100% my family as a beneficiary, you don't need an approval from the bank. Bank will love this product because we're adding an extra layer of protection just in case if I die or if I become disabled, hey, they know the money is secure, okay? But at any given point, you're assigning this policy. You're not making bank as a beneficiary. So in that case, you're 100% in control as the owner of this policy. And at any given point, if you decide, I don't want Wells Fargo or any other bank or a lender to be an assignee, I want my family member to be a beneficiary, just fill out one form, send it to them, and they'll take that assignee form away from them, and now your family member is a beneficiary, right? So that's how it works. It's a very simple product. It's a huge volume that you can do. Now think about it, how many house owners that you know? Personally, we all should own this if you ask me. If there is a need, definitely. Okay, because we're not going to put all our money at an investment. Somewhere you have to put the money. But here, in the uncertainties of life, if something happens, you get a very big return. Okay, you get dollars over pennies that you're investing over here, and if nothing happens, you get money back. And again, excuse me for repeating, okay, the living benefit, chronic, critical, and terminal that you did, and you get your entire money back if you outlive. It's a no-brainer. This product sells by itself. That's why this humongous volume companies are doing it. And just think about it, as an associate, as an MD, as an RMD. If you can help, I mean, one client a week to put $200 a month, one client I'm talking about. That means if you collect $800 worth of premium, which is, it's a very, very easy sale in my opinion. At $800, that is $10,000 worth of annual premium, what you're collecting every month just by 4 simple term policies with a simple application, with a simple phone interview process where the client has to go through. Your commission as an associate level is $5,200. As an MD, $7,000. And as an RMD, it's a whopping $9,000 a month, which is $112,000 or $110,000 a year, just by closing 4 simple term policies. $100,000 you all can make as an RMD, or about $84,000 as an MD, and about $60,000 as an associate. Now, if you're selling 4 policies a month, you will be not an associate or MD. You will become an RMD in 3 months. So it's an amazing product. Everybody needs it. That's why there's just one company, okay, who was a part of Sean Mike, who was there in our convention, who said that there. And also, Chandra, when you were talking about the equity share and you were talking about becoming a managing partner over there, let me just clarify a few things over there as well. Is there was a guy named 28-year-old David who was there at the last day after Sean Mike. This guy used to bag groceries, okay? And he said that I joined this industry. All I did is sold this product for 3 years. I had a complete calculation in my mind that how many prospects I need to have to reach out, how many flyers that I need to send, how many people that I need to call, and after that, and this 28-year-old were making $1.1 million a year. 28-year used to bag groceries. His cash flow was over $1 million. He sold that quote for over $9 million to Integrity, become a managing partner, and his life got completely changed just by selling one product. And obviously, he has a huge team that he built with this product. All they do is just one product, and they're doing $800 million worth of production. So, guys, there is some serious money involved in it, and I want all of you to take advantage of it and go out, recruit the masses. There is a huge potential for this. The maximum amount what you can purchase is $450 because they don't have the full underwriting, so they cannot afford to go more than $450 because that's a huge liability. It's an amazing company, 120 years old company, A++ rated company all over in all those three different rating bureaus. I've rated them. I feel very secure to go with them to do it. Now, from the managing partner program that what we were talking about, from the integrity, it's for next 3 years that you can sell your business code, your company that you're building among a company, which is NGI. Okay, you're building a company under NGI, your own firm that you have your code, you can sell it from between 6 to 10 times. But here there are a few clarifications that I want to make it. If your cash flow is $100,000, they're not going to buy your code. Okay, I want you to be very, very clear. They're not going to buy $100,000 worth of cash flow. They are looking for minimum $300,000 to $500,000 worth of cash flow. They are not interested in purchasing small amounts. They are not going to buy your code if it is 100, 150, or 200, which also gives us an incentive, a encouragement to achieve that cash flow level. And if I would be you, even on a part-time, full-time basis, I would fight for that $300,000 to $500,000, because if the evaluation of my total income is about 6 to 10 times, definitely I want to earn that. Okay, and forget about the evaluation also. Making additional $300,000 to $500,000 a year, that is also an override passive income. It is pretty phenomenal income for you to do that. But in my opinion, it is a once in a lifetime opportunity if you can build this. Second thing, if you're only building your personal and if you don't have an override business, they're not going to buy your business, because it is your ability to just go out and close. They are not interested in that, because they are only interested to buy your agency. What does that mean is, if you have a pure override income, that means they know they are just not buying one individual person, because there is no guarantee that if I'm doing a $100,000 business today with my own pen by just going and helping clients, whether I'll do the same thing next month or next year, integrity has no clue. Now it completely depends on me. But when they believe in our business model, but if you have an agency of 15, 20, 50, 100, 200, 1,000 agents, they know that not all 15 or 20 of them is going to stop writing the business. So they are going to buy your override business. And then if you have some of your personal, sure, they'll consider that. But they are not going to buy your business. If you just go and close it, like Mike Jolie, he cannot expect to get $12 million from them just because he closed one big sale or multiple sales that got him $1 million. No. That is one person individual ability to go out and has its special skills to go out and close those large sales or multiple sales. That's why, friends, I would highly recommend you to focus on building agencies and do it. Right now, I know most of you people know Altaf Himdani, who built this business in the last 4 years. His cash flow is about $1.3 million. His offer on table at this point from Integrity is over $10 million. So if he decides to sell his code, he'll be able to get about $10 to $12 million that he can walk away with that cash by selling his agency. Now he has several R&Ds and stuff. Now the guy I recruited about 5 years ago, his goal was to make $10,000 a month, full-time basis. Today he's making $1.3 million as a humongous. But what he has, besides his cash flow, what he has earned and built his company value is about $10 to $12 million. So guys, understand the business model, okay? And if you put the effort, it's there. There are a lot of people out there who's looking for change. There are a lot of people who want to be a part of this industry, and especially now with Integrity merging with us, everybody wants to be a part of NGI for 2 reasons. One, ground level opportunity. Second, we have amazing product line. Third, we have amazing leadership, which is including Hubert Humphrey. Fourth, we have an amazing equity payout from NGI. And the fifth is become a managing partner with a huge evaluation of between 6 to 10 times of your override and your personal business. So guys, nothing but an exciting time. I'm all in this run. Understand the products, simple enough to go in to sell it. And if nothing, imagine just by helping 4 clients, 1 client a week, simple conversation. Hey, you own a home, this is how it works. When you pay so much mortgage, I don't think so adding in $200 a month can protect your house, your aging parents, your family. They don't have to downsize. You don't have to worry about what happens tomorrow, who's going to take care of my mortgage. Here's the thing, and if you outlive, you get your entire money back. In between, if you get chronic, critical, or terminal, hey, don't worry, the insurance company is backing you up, you can imagine. Simple, guys. It's pretty simple. I have to jump to the next webinar in 6 minutes. Do you have any question for me?
Okay, this is Radhika. Can you go over that? You mentioned that if they take a $450K policy, 410 goes. What was that calculation? Is it assigned to the bank? The bank takes the money and the remaining is given to the family, or is it that the client has the option of getting the entire money for the family?
That is completely up to you. You either, let's say, if I buy a $450,000 policy, my mortgage is only $300,000. You know what? I don't assign to a bank, and I would say, you know what? Instead of me assigning a bank, I will make my wife or my family member a beneficiary. Let the $450,000 goes to my wife, and if something happens to me, my wife will cut a check for $300,000 to the bank. That's one way of looking at it. Or if I wanted to assign a bank, I can assign a bank. But as my mortgage balance will start depleting year after year as I'm making more mortgage payments towards it, then whatever the payoff balance is will go to the bank, the remaining money comes to the beneficiary. So I would assign it to the bank or keep it to the family member. It's completely up to you what you want to do.
Okay, thank you.
Aki, I have a question. Hello? Can you hear me?
Yes.
Yeah, question
Yes.
is, can this be sold to two individuals in the same family?
Yes, you can. The maximum face amount is $450,000.
Right, so
yes, the answer is yes.
Yes, so three people in one house, I can sell all three of them individually and cover the mortgage that way, right?
Correct, and it doesn't have to be a mortgage. I mean, don't.
Yeah, you're right. I mean,
what if somebody lives in an apartment and is renting that, or he rents a house? No, they can purchase this, and now since they don't have a mortgage, or even if I have a mortgage, I don't have to assign it to the bank. I can just use it as a normal life insurance product.
As long as we can sell it to different individuals in the same household, that should be fine, right?
That should be fine. Per individual, per person, it is $450, and the issue age for this product is 18 to 60. Okay, we cannot send it to juvenile. But 18 is the minimum what we needed. Maximum is till the age of 60. So someone who is 61 they are not eligible for this product. Neither someone who is 17 and under is not eligible. So the issue age is between 18 to 60.
Sounds good. Thank you.
Okay. Yes, guys, I'm super excited about this product and overall everything that's going on in NGI. Even now, imagine we have an amazing IUL products. Now we have annuities. Now we have Americo. We also have a final expense product, which also works the same way. So this commission structure for Americo and final expense, they both are 115% grade. Whatever level you are at, just calculate that way. If let's say the target premium is $1,000, then what happens is they will pay you $115, so $1,150 because they are adding 15% more, and then $1,150 will become your target premium, and then whatever your 45% is. So that comes to about 50, 54%, 70%, and 90%. So that's pretty huge. So it's a good product, even if you can just help $2,000, just $150 a month for families can help you to make about anywhere between $6,000 as an associate to about $9,000 with your own pen. Now imagine the override is also huge because now since the spread is, the grid is 115%, your override is also huge. Now with this kind of products, you can recruit a lot of people out there, and not only just realtors and lenders, but also everybody, because everybody knows it's there. What is the training? Do you learn a mechanism or the technical aspect just like an IUL and annuities? No. The training is, again, excuse me for repeating, if you die, this much money you're gonna get. If you live, you get your money back. In between, if you fall sick, you get your living benefit. Win-win situation, you're good to go. So with that, guys, if there are no more questions, I will just give it, but also the managing program and everything that's happening over here in the company, is absolutely phenomenal. If you ask me, this is once in a lifetime opportunity where I want to take the full advantage of it, because again, there is no business out there that you build on a part-time, full-time basis, build an agency, and you get an opportunity to sell it, which is completely optional what you want to do. And if you want to take advantage of it, hey, why not? Because if I have 36 months to go to work and build something big, and again, it's not going to consider the personal sales, it has to be a combination of both, right? With that, I'll give it back to my friend Chandra Joshi. Thank you for conducting, giving me an opportunity to share my thoughts and experience with all of you. Looking forward to build it big, and I'll see you at the top. Thanks.
Thank you. Thank you for that. All right, real quick, if you are new, Aki is Executive Vice Chairman, is my mentor, and he's the person who got me into this business. And I saw you the check in Vegas, that $3.8 million check he earned. So amazing, we are lucky that, Aki had some time and he shared this information, detailed information about the product. And great news, I didn't know about it, 115% payout, commission payout on the target. So that is a very good news. So till next meeting, I think we went for 30 minutes more, but thank you everyone. And I'll see you on Saturday. Thank you very much.